Anyway, welcome. All right, we are past the start point, so let's do the introduction. Basically, this is our whenever there is a fun event coming up in the news, NEWZ world, in other words, an economic release that could shake the market up. I love to do these little live sessions. The whole story is really simple about what's going to happen. It doesn't matter what the number is, PPI, CPI, PMI, pick an I, or NFP or FOMC, they all do the same thing. They just are a little bit different patterns depending on what's coming and the nature of the information. So today we have FOMC minutes, and this one's important because to understand that what we're getting, we already know the FOMC's decision, but we don't know who thought what ways. And so it's interesting to see that, and it will come out in the form of the minutes, and the minutes will get scanned really fast by everybody looking for keywords, and we'll get a response to that. So that's what we're doing here. So, it's about fading extremes if we get them. The market gets really, really thin. Everybody pulls their bids and pulls their offers, and it tends to overshoot extremes. So if we can trade them, we trade them. I'm a little out of breath for some reason, so I'm going to sit down. I don't use a news feed. I was asked, what news feed do I use? I don't. To feed the what's coming up, that's the releases and their times. I just use the one built into Jigsaw, which is that one. I just am I sharing my screen, JBC? I'm not, am I? Okay. So I suppose
no, you are not. I had it hidden behind another window.
I'm going to go ahead and do that first. So that's what I do. I get it in Jigsaw. There's a little panel you can pop out that has the release times. But I don't use a news feed at all. Like the actual stories breaking. I used to, and I found in the past it was nothing more than really distracting for me. By the time it appears anywhere, it's already been priced in, and it's the reaction that I'm interested in. Not, whatever somebody said or whatever the number itself was. So I stopped looking at a typical feed. If I'm just looking for, what's going on, I typically go on Twitter or Google News because, I can just look at a broad range of services. The FOMC minutes are coming at the top of the hour. You can see I have a little clock in the bottom right-hand corner now for everybody. So they're coming at 11 o'clock my time, which is 1 o'clock Eastern time, and 2 o'clock Eastern time. And this one, there's not, so all right, let me back up a second. When you get the FOMC decision, then we get the number, and a half hour later there's a press conference. This particular one, all they do is release the minutes in printed form, electronic form. And so everybody scans them really quick, looking to see who was where and how aggressive they were in their opinion. So that's what it's about this time. And that gets released right at 11 o'clock, my time. So between now and then, it's like still 9 minutes out. Anything else you guys want to talk about, we can. This is always, the trick to these is look for extremes. I look to see what the extremes of the day are. And that's where, like, here's my Thinkorswim panel. And here's the 4 indexes. If we get to extremes of SD2 or better, the orange lines to either direction. And, we were down there and it was a really nice long earlier. We haven't been to the other end of the range yet today. So, if it gets the market to either one of those points, that's when I start looking to play and I swarm it typically, because they're, even if these things really go far, they almost always pull back a lot. It's not like they just break one way and keep going. So, I look to fade a real big reaction, particularly on the second pulse in NQ or MNQ. Like, if there's a high and, we blow right through it, I won't just suddenly fade it most of the time, unless I'm really going to scale in a lot. Then I might try that there. But I talked about this in the session this morning after we got the news this morning, and that was a really good example of it this morning. If you look on my 5-second view here, you can see this was when the news came out this morning. That was the first pulse, and the second pulse was the ideal spot to fade it. And that's really common. So if we get another move either way like that, ES can be trickier. Here's what ES looked like at exactly the same point. It had 4 pulses. A lot more bots operating in ES. And you can see, look at that. 1, 2, 3, 4. It's still the same setup, but would have been a little trickier to execute into as usual, which is why lately I am just trading NQ and MNQ and loving it. I'm getting really good results. And I've been posting them in the pit most of the time. Yeah, it's good market for this type of approach. What can I say? So anywho, number comes up in 7 minutes. Again, if you have any questions or comments, put them in the chat. I will always entertain them on these kind of free open sessions when we're trading a news event. And this session won't go long. If we're going to get a reaction, we'll get it pretty much right away. And, we'll get an extreme, certainly in the first 5 or 10 minutes after the minutes come out. It won't, you don't need to go much farther than a half an hour to get a couple of good trades off. Particularly if it gets going one way that we haven't been yet. Like I said, the upside looks interesting if we can get up to SD2 in any of the indexes. Or, if it were to retest the low, SD2 or SD3, that looks really interesting too. So those are two places that my eyes are watching. And those are, that applies to any index, but I'm particularly interested in trading in Q today as usual. So that's where I will be. What are those areas? Well, the low of the day is 975 in NQ, and that's also right at SD2. So that's the first place I would look. To the downside, the upside, it's 198. So that would probably go. So maybe 200, 220 area to the upside. So that's quite a ways up from here. And quite a ways down from here because we're right on the VWAP and between SD1 and SD minus 1. So SD2s are a long way away. They're an entire additional standard deviation. What a shocker. Okay, come on over here, Zoom toolbar. You're just not convenient no matter where you are. All right, well, I'm going to put my feet up and relax for a moment here while we wait for something interesting to happen. You never want to get in front of these news announcements. It's just not a good idea. If you have a profitable trade on, I'd either flatten it out or I'd protect it really tight with a stop, and you're going to get hit, so you might as well get flat. It's just, it's too unpredictable right when numbers come out to even think about being in any sort of position, no matter how good a position it was. Everything's going to change completely in a minute. People don't understand that. That's why all the firms used to make everyone stop trading around news announcements, because new people just don't understand the significance of news in hitting the market. How the liquidity goes away and how we can get so volatile for such a short period of time and then go right back to wherever we were. That routinely takes new people out of the market because they don't manage risk. They haven't heard that enough times yet. Tsunami. Yes, it's very tsunami-ish. That is true. Yeah, and then once it passes, everything settles back down and the water goes back to wherever it was, the water level. Yeah, that's a good way to put it. Okay, we have just about 3.5 minutes. You guys can see I have my cool little clock blown up down here for all of you now. That's actually helpful for me too, to keep that dock down there. That little free clock app is really useful. It does all kinds of clever things. I could make this bigger or smaller and change things if I want, but that's a nice tiny bit of the screen, but it's really useful just as a reference. Even if I'm looking at it with my old eyes, it's big enough that the one below it is really hard to read. Yes, Donna, I'm glad you asked for it because it was good for me too. Let's see, question from Kevin. Jeff, do you look at the divergence between futures price and the tick? I don't look at divergences because I say this all the time and it's a little hard to understand right away, Calvin, but I look at things like that to to keep me from making mistakes. The tick and the tick of the NASDAQ and the LRC range. I don't trade off of those. I don't use them for entries. They're not indicators. I don't use indicators. What I do is I'll look over there and I'll say, okay, the market's really weak right now overall, but the NASDAQ's really strong. That might keep me from trying to go long with the NASDAQ at that moment, because I would say, I would see that it's separating itself from the rest of the market, and although it tends to lead, that gets dangerous. Other things, let's say I'm looking to get long and I see, the NASDAQ tick starting to increase and the advanced decline there has been strong, and I see the tick of the broader market strengthening, that reinforces my idea that, okay, that's a good spot. But divergences, no, I don't look for them, because again, you're the tick and the tick of the NASDAQ are measuring what's going on in the equities, and futures are a derivative of the equities, which means ultimately whatever the derived relationship is, it will be there, but it can go away from that a lot. And the problem I have with divergences is there's often good reasons for them to diverge, and they're not necessarily signals. So that's kind of a short and long answer to your question. Cool. You're welcome. There used to be, Calvin, I don't know how old you are, how far back you go, but in the late 90s and early 2000s, the hedge funds used to do something called program trading, where they would trade the futures against the equities in baskets of equities against a futures contract or a group of futures contracts. And that's what they were doing. When the two got too far apart, forget the word divergence, but when the two separated too far from being in sync, they would start trading the pair, and it's an arbitrage trade, and just by virtue of them doing it, they would come back together, and so these are all kind of arbitrages, because you're looking at two different groups of things, but they can stay. For example, the equities can go into extreme minus ticks for real long chunks of time as the equities are selling off. And the futures sometimes will put in a really good low and go the other way long before the ticks turn in the market. So that's one example I see all the time, because the futures are predicting the upcoming turn. That's what's happening. So yeah, and again, really good questions, by the way. You ask good questions, Calvin. So, all right, here we go. We have a number. You can tell because we're all of a sudden really crazy volatile here. Look at this. Price discovery. So not a number. We have the minutes. They're out. It's 11 o'clock. Everybody's scanners are running full blast, and their little AIs are trying to decide if there's an edge here. Let's reset all the domes and center them all. And let's see if it gets going. It's certainly not going to any extremes. We're right on the POC and the VWAP on every single index. So we are perfectly at value right now. And we're still pretty thin, though. I'm looking over here at the ES book. It's still only double digits out, 10, 15 levels. So I don't think we're priced in yet. I would still sit back and wait here. I think we have more fun coming, but we saw a little bit of volatility there. So let's see what happens. Yeah, to the question and my answer to Kelvin a minute ago, this is one of the most important things to really internalize into your head if you want to be a good futures trader, is that there's a lot of good places to get information as a futures trader that can help you game your trade. But you have to really understand the nature of the information, not go looking for indicators, because that never works in the long run. It only works under certain sets of conditions, and it's always late. But if you can learn how to read, read order flow, read the bid and the ask energy, like this morning when we saw that 15-minute break go right after all of that absorption on that iceberg there, it was just such a classic setup. And there's no indicator that can say what to do there. You just have to know from experience and from the statistics of the setup what's likely to happen, and that's what you trade. And it takes a while to internalize that. Some people never do, but the sooner you internalize that you're playing a game of thinking in bets, and that, the idea isn't to find the perfect toolbox, it's to learn how to use the tools. You're a carpenter, and as a carpenter, a good carpenter can take any saw and build something nice. A good saw, a bad saw, he can still do good work. But a really expensive saw doesn't make a guy who doesn't know how to build something know how to build it. So the tools are just tools. And it takes a long time for people to burn that in. Some people never do. But once you get that in and you start realizing that all these things we're talking about are just tools to help you make decisions, then you start focusing on the decisions you're making. That's your process. And that's when you start getting consistently profitable, because that's what it's about. That is the game we play right there. So what's going on here? Absorption at the top of the range. We've moved around a bit, but everyone's pretty happy here. Look at the ES dome, which is this one over here. Pretty symmetrical for this is RTH, high and low. We're right in the middle of the value area, which is what's highlighted. We're just above the VWAP, but not by much. Market looks like it's really accepting. We're kind of at the top of the short-term range, but that's after pushing down a bit, so that's not a surprise. Let me bring this back over here. So this is my Thinkorswim view, which is just handy for looking at the extremes all together, and it's just, you can do this in any platform. But so this is interesting, guys. This is today, and the VWAPs for today. I also look at the weekly VWAPs, but the VWAP and the extremes, 4 standard deviations in either direction. And this is interesting. So we got that number this morning, and that shot us up to, SD4, and then, we caught up with ourselves. We traded right back into value. This is where we opened. This was the gap up, and we filled the gap across the board in all 4. And look where we are now. The blue lines are the VWAP. We're a little bit above it here, a little bit below it here, right on it here, right on it here. It's pretty hard to argue that the market isn't pretty happy here, which pretty much gives us nothing to do going further for this setup with the news reaction. The next setup is until the close, and that's, still 2 hours away. So I think what I'm going to do, we'll go a few more minutes here and see if this gets any more interesting at an extreme, but so far it doesn't look like it wants to do that. So yeah, it's a pretty lame, well, remember, it's FOMC minutes plans. So, but it's a pretty quiet one. Yeah. I can't imagine that anything that was in the minutes is going to move us a lot more. But I'm watching the liquidity coming back in now. Now we're finally starting to fill in here. We're getting back to 3 digits. You can see liquidity above and below the market here and here. And it's pretty much going to settle in here. So why don't we go a few more minutes, 5 more minutes, and see if we get anything out of this. But I think the trade today, if we get another good setup, is going to be at the close, and I don't want to run the session for 2 hours waiting for that. So that was a pretty lame one, though. Normally it's a little more volatile than that. Look at, the volatility we got. All it did was test the extremes of the short-term LRC range, which is one of the reasons I love the LRC range. No matter what happens in the short term, it tends to be really accurate at showing you the boundaries, which is all you're looking for. Again, it's not an indicator, but just a really good way to get a sense of where we are, where this price is where in the range. That's the question it answers. Again, this is a tool that is answering the question, where are we in the range at this price? That's what it's telling me. It's not telling me buy or sell. I don't buy the bottoms and sell the tops. It's just telling me what's going on from a statistical point of view without an opinion. It's a regression. It's just saying, yeah, here's what this says. Do whatever you want with it. And that's what you need your tools to do. That's what, footprints do as well. It gives you the data. If you know what you're looking for, you can make really good decisions against that data. But, if you're looking for a tool to say, do this here or do this there, that's hard to find. Those are not reality in most situations. Look at all the absorption we had on the push down in ES, right into liquidity. It took out the first level of liquidity, and then it pushed down a little lower. That absorbed it, and then we traded right back into the range. That's a really common behavior, and that would set up a nice long there. And you could have started there, got aggressive there, 1 + 1, that's a really good setup for that kind of risk management. But that's common. We're one level all by itself. You just can't be too committed. But a general area with lots of absorption, like you're seeing in the traded volume here, is telling you the story. It's running out of sellers and the buyers are sucking them up. And it's not always going to do that at exactly one spot. But the general behavior of it doing that, particularly when it's right on the POC and right on the VWAP, that tells you books about what's happening. That's no brainer long. It's really clear. And if you're wrong, it's really obvious. It would take out the bottom of this range, and there'd be no liquidity there trying to absorb it. So, it's really obvious that that's the right idea there. So it's important to learn how to read the tools and, not try to use them as indicators. That's a really common mistake to people that are newer into the order flow world. It's about what's the information the tool is giving you and how can you use it. Okay, so we'll just go a couple of more minutes. Are there any other questions or comments? I think I can even make this a little bit bigger. I think it stretches. Let's see here. Can I move it out? Yeah, I can make that even a little bit bigger, which is cool. There we go. The little alarm thing means I've got alarm set, and it also, when I miss one, it flashes a different color. I don't know why I put that away before. So actually, Donna, I should be thanking you. It's nice that I have it back. It was useful when I used to have it, which I did during a lot of the workshop. I don't know why. I guess when I changed computers, I forgot to change those settings on that. Anyway, so close to just to VWAP.
I think he's saying, so the close.
The close. Well, we don't have a good closing setup. That's what I'm saying right here, Lance. It's that the close will be the next opportunity where the market will typically get farther away from it. And today it looks pretty balanced, and but it's a little too sweepy to try to just do scalp any sort of size. The ranges are a little too large for that. What I would be looking for at the close is at any of the extremes. So it's not just where's the VWAP really, but it's, if we get to any of the extremes, that's usually gameable, depending on how it does it. Both ways, for example, we could get a little bit of a short squeeze going into the close. And, I tend to go with those in the middle of the week. But when they start getting to extremes, that's where I'm going to start taking profits and looking to maybe fade it the other way. And the same thing to the downside. But, when you're this close to value and it's sweeping back and forth like it's doing here, we just saw a bunch of that. It's just really hard to do anything with any kind of good edge. You can trade this, but you're just taking a lot of risk. It's the end of the rookie roast going into the close. But when we get to the close, it's a lot more predictable because the statistic I mentioned this morning is important, that it's really unusual for the market to make new highs or new lows in the middle of the day. It either makes them in the first hour or two or the last hour or two. And it also frequently, when it makes an extreme in the last hour or two, it retraces some of that. It's very unusual for the market to make a new high or a new low at the close and then close right at the low or right at the high. Because the people that got it there, whatever momentum got it to a new high or a new low, they take profits in futures. And, something could happen in the equities that could cause that. Another pattern that sometimes happens right at the close, this is worth knowing about, is that there's often earnings announcements right after the equities close and the futures are still trading, like right at the New York Exchange close at 4:00, right? And so Eastern. And when that happens, sometimes at like 4:04, we'll get some crazy move. That's often the reason. And those are really tradable, again, because it's just speculation based on the earnings announcement. The equities themselves have pretty much stopped trading, except for, a little bit of extended hours volume, which isn't really noticeable. So that's the closing setups. And that's why I started doing the sessions on Friday a few months ago, and next month I might move them to a different day. Like Wednesday close is often interesting. I'm usually just too tired to do it because I do the open, but we'll toss the schedule around and make it different so that it stays fresh. And I will consider that along with a couple of other things I want to change. So yeah, the close is a really interesting time for futures trading, particularly in NQ. Again, a lot of times you can see this happening over an ES, but actually trading it profitably can be really hard because it might only move 3 ticks on the event, whereas over an ES, you can get 10 points, or excuse me, over on NQ or MNQ, just because they move so much more on the same amount of movement. 1% is the same in both of them, but on the way to moving 1%, NQ and MNQ will move around a whole lot more. And that gives you, as a scalper, the ability to scalp more aggressively and scale in and out, which is valuable. All right. Coming up on quarter after here, it's just popping around here and sweeping both ways. I would pretty much stay out of this altogether, to be honest with you. Look, see, we're sweeping both ways. And when that's happening, it's really hard to do anything. And the range is holding, but now we're at the top of it and it's skittish up here. It could squirt out of the range. And no, I would not try to do much here. It's just not trading really predictably. It looks like it's a good place to be short, but I'm going to reset all the domes. But I wouldn't be too aggressive at that because of where it is in NQ. It's in the 70s. It could be at 0.0 in a heartbeat. And so I just don't like the spot that it's behaving that way at. If it was doing this up toward the highs, I'd be trading it long or short. Okay, so we'll go ahead and wrap up at 11:15 my time, which is in another minute and a half. If there are any other questions, start typing them so I have time to answer them. I will stay until all questions are answered. Otherwise, thank you everybody for coming. Hope you enjoyed it. Didn't really have a very interesting FOMC minutes reaction, but it was still, educational. They always are. The more you do, the more you feel the rhythm of what's happening. And then when it is a good one, you can react properly and get some good profits out of it. That's why I just routinely do this. Just every time we have one of these things, I set up to scalp it and I get a good trade or I don't. And it's just part of, that's part of what we do for a living. Thank you, Maria. I appreciate it. Appreciate you coming. Of course, everybody. Thank you. JVC, I'll go ahead and ask if you have anything you'd like to add before we almost are out of here.
I got nothing else. So we'll see you guys tomorrow for a fishing trip.
Okay. Any tips for squeezing more out of MNQ trades? Well, you've asked me this both privately and publicly, Lance, and yes, there are some. I'm still struggling with exactly how to schedule the scalpathon, but the scalpathon will be perfect for you because I'm going to just over 2 weeks just do nothing but all different kinds of MNQ trades. My live sessions, you guys have seen a bunch of me trading the open or trading the close or trading the news, but like overnight, we haven't had a chance to do any of those live recently. There's been some good stuff, particularly around earnings. This Friday, we may have some of that because all the banks are reporting. I may do an ad hoc session Friday morning early, my time, 3 a.m. my time, so we can catch the bank earnings. I'm thinking about that. That would be another example of what, those are the places I can really work my swarming because I get lots of extremes. When the market's range bound like this, you can work NQ, but you got to really be nimble and understand the timing and what's coming in the news. And it's harder to stay dialed in on it in the middle of the day, but it is doable. I generally don't do it around announcements like this, though. Boring days are the best days to do that when there's no news, nothing to shake us up. So yeah, I am going to try to do more stuff around those. And sit tight, it's coming. Well, I've been doing it a whole lot longer than you, Lance. I mean, you're comparing yourself to me. That's like, I'm Max Verstappen, and you're a housewife in Minnesota driving the family van. I mean, we're not on the same racetrack. But here, yeah, you want to see how I'm doing today? I'll show you. I'm not shy. I'm only trading one account today. Let me just crush my account names here together and I'll let you guys see my P&L. Here we go. I'm at 1,200 today. I slept in and I'm trading a little bit light. But yeah, I'm putting up $2,000-$3,000 days every day with 5-10 micros at a time. It's swarming and it's working really well. And I do want to teach more about this, and I am doing it a couple of folks one-on-one, but I want to get the scalpathon scheduled and, maybe possibly take on some more folks one-on-one in the next month or two. So sit tight. We're working on all this. It's really challenging to put together good education that's good for the instructors and for the students. Students want this get rich quick stuff. It's just not realistic, and it's really boring to teach. But really good stuff is coming. Lee's got some really cool new tools coming with emoji. And as I said, I'm going to be doing another scalpathon and focusing on different types of scalping, like range scalping when we're in the middle of the rookie roast, which is an ideal time to do it. So we will get more stuff on this topic into the calendar. We appreciate your patience. I'm still sick too, which has really been frustrating. I've been battling this cold now for almost 3 weeks, and I wake up really congested, and it's really hard to function. So apologies for that as well. Let's see. There was one thing I wanted to say about that whole scheduling thing. What was it? God, I had one more thing I wanted to tell you guys about upcoming stuff. And thank you, Kelvin. I really appreciate that. That's what it was. So this is April. There's some really cool stuff coming down the road. Lee gets mad if I tease his stuff too much, but he's got some really cool stuff coming that it'll blow your mind. And we're going to do a lot of courses around that. A lot of masterclass kind of stuff and, advanced use stuff, which some of you are getting to the point. And that's so on his side, that's what we'll be doing. And I'm, as I said, going to do another scalpathon, which, 24 hours a day scalping for 2 weeks. And we're going to incorporate into that the range stuff. So look for all of this to be start being calendared next month. So we've already got the April calendar done, but we meet in a couple of days to do our calendar for May. And we're going to start putting some of this out there. And hopefully I'll be healthy enough we can get the scalpathon scheduled. That might even be scheduled, by the end of the month. I'm hoping to try to get it really early May, if not right after that. So, okay, I think that covers everything. I don't see any other questions. I can't find my mouse pointer. So, God, look at that absorption we just had right there. 9 by 189, and we're below it. Do you think somebody sold a block? Okay, anyway, let's get out of here. Thanks, everybody. Thank you, JVC.